The morning light spreads across the glass walls of a downtown office. A man in his late 30s opens his laptop, the glow reflecting on his coffee mug. The city hums outside, filled with movement, messages, and meetings waiting to begin. This is the rhythm of business in America. Behind every sale, every idea, and every late-night email, one thing silently defines success: how well the finances are managed. Every business owner understands that handling money is not only about paying bills or tracking income, it is about control. It is about knowing exactly where every dollar goes and what value it brings back. Yet, many owners still rely on outdated spreadsheets, scattered invoices, and long nights of manual work. The difference between steady growth and constant stress often comes down to one simple decision: the tools they use. The story of every successful business begins with organization, not the kind that comes from tidy desks or color-coded folders, but from clarity. True clarity comes from knowing your numbers, and in today's world, that clarity is built through software. Financial management tools are no longer meant only for large corporations. They are now the unseen partners of small business owners, freelancers, and startup founders across the United States who are trying to understand the flow of their money. Picture a small design studio in Austin. 5 creative people, 3 loyal clients, and countless deadlines. They excel in their craft but struggle with numbers. Payments arrive late. Expenses grow faster than expected. Tax season becomes a storm. One day, they discover a software tool that tracks every payment and expense automatically. No extra accountant for minor updates. No guessing the cash balance. Within weeks, clarity replaces confusion. Budgets align. Salaries flow on time. The business begins to breathe again. In America, efficiency is survival. From independent consultants managing a few clients to mid-sized companies with hundreds of employees, the right financial software does more than simplify work, it empowers decision-making. The line between chaos and confidence begins with a login screen. What makes a financial tool powerful is not just the number of features it offers, but how naturally it becomes part of a routine. A business owner should not have to be a financial expert to manage finances. A tool should adapt quietly to the daily workflow, anticipate needs, and show what truly matters without overwhelming charts or hidden fees. When a system works for you, management becomes calm, not stressful. Among the most reliable tools used by business owners in the United States, 5 names often rise to the top. Each one serves a unique type of entrepreneur, yet all share a common goal: to provide control and clarity. The first step is to understand what kind of control a business truly needs. Some businesses require precision, tracking every invoice, every payment, every small adjustment. Others demand speed, creating estimates, approving bills, and monitoring results in real time. Some depend on connection tools that link directly with banks, automate reports, and gather every number into one trustworthy space. Here is one simple truth: time spent correcting financial errors is time stolen from growth. The purpose of a financial management tool is to give that time back. It is not just an application. It is a decision-making companion. The right tool does not merely track money. It identifies waste, predicts patterns, and builds confidence for faster and cleaner decisions. Imagine walking into your office tomorrow morning. No confusion about pending payments. No hidden costs waiting in the background. Every report ready. Every record accurate. Every number verified. That is the environment these tools create: a calm space inside the busy motion of business. In competitive cities such as New York and San Francisco, companies using modern finance software grow faster. They spend less on accounting errors and more on strategy. They identify slow-paying clients early. They notice spending trends before they harm profits. This is not a theory. It is the daily reality of how digital tools protect businesses. Still, selecting the right tool can feel like a crossroad. QuickBooks is known for reliability and depth. Xero focuses on accessibility and cloud-based control. FreshBooks values simplicity for service providers and freelancers. Zoho Books brings automation and detailed integrations for growing teams. Wave offers elegant solutions for small startups without the burden of subscriptions. Each one tells a story. Each one defines a different kind of discipline. QuickBooks represents structure, the accountant's trusted digital assistant. Xero represents freedom, access from any place, at any time. FreshBooks represents simplicity, where financial tasks feel personal again. Zoho Books represents innovation, automating the repetitive to make small teams powerful. Wave represents accessibility finance for everyone, clean and free. Every tool has its own rhythm. The goal is to match that rhythm with your business. Some thrive on detailed control, others on automation. Some require analytical reports for investors, while others only seek a clear snapshot of cash flow. The right software is not necessarily the most advanced. It is the one that feels natural from day one. Consistency is the real key. Tools only deliver results when used regularly. Once a business commits to one reliable system and trusts its process, clarity begins to appear. Monthly reconciliations turn smooth. Tracking profit becomes easier. Decisions become logical, not emotional. Running a business in the United States is an act of balance between ambition and compliance, between growth and security. Financial software quietly keeps that balance steady. It works in the background while the business moves forward. When the system functions properly, something remarkable happens. The anxiety that comes with unknown numbers fades away. The exhaustion from late-night accounting sessions disappears. The business owner who once avoided opening the financial dashboard now looks forward to it. Because clarity creates peace. Financial tools do not just provide data, they provide calm. A calm that allows entrepreneurs to build, to grow, and to innovate without fear of financial confusion. When the money is organized, creativity can expand freely. 5 tools, 5 different paths. One purpose to make financial management feel less like a struggle and more like a confident, sustainable journey toward growth. The screen flickers to life again. The same man from the morning sits quietly, the hum of the city fading behind the glass. His eyes move across rows of numbers, clean and aligned. Each figure tells a story about growth, about choices, about every small decision that shaped the company's path. Software does not change what a business is. It changes how clearly that business can see itself. The first step toward mastering financial clarity is understanding purpose. A business tool is not a replacement for discipline. It is the structure that supports it. The software cannot make someone responsible, but it can remove the noise that hides responsibility. It transforms uncertainty into patterns, confusion into progress. The most successful American entrepreneurs understand this. They do not wait for the end of the month to know where their money went. They watch it move daily. They learn from it before it becomes a problem. QuickBooks has been the backbone of small business finance in the United States for decades. Its design is practical, built for those who prefer accuracy over appearance. It connects directly with banks, organizes every transaction, and turns numbers into reports that even a non-accountant can understand. It brings a sense of trust and assurance that everything is recorded exactly as it should be. Many mid-sized firms rely on it because it integrates smoothly with payroll, tax filing, and inventory. It represents stability, the quiet kind of reliability that allows owners to focus on building rather than balancing. Across town, a new generation of businesses has grown around flexibility. Remote teams, cloud operations, and digital contracts have changed how people work. Xero entered that world with one mission: to make accounting accessible anywhere. A consultant in Chicago can send an invoice while traveling. A startup in Seattle can check expenses from a phone. Real-time collaboration means the accountant and the owner look at the same data at the same moment. No more outdated files or waiting for updates. This immediacy is what keeps modern businesses alive. FreshBooks walks a different path. It was born for freelancers, designers, writers, and independent professionals who see their work as art, but still need financial control. It simplifies every step, creating invoices, tracking time, recording expenses. It turns financial management into something that feels personal. The interface is clean, friendly, and human. There are no complex charts or heavy terms, just clear communication about who owes what and when it is paid. For individuals who once feared dealing with numbers, it becomes a comfort zone. Then there is Zoho Books, part of a larger ecosystem that connects sales, customer service, and accounting. It is the quiet powerhouse for growing teams. Automation is its heartbeat. Repeating bills, scheduled reports, and synchronized bank feeds save hours that once disappeared into routine work. For companies scaling quickly, this automation feels like extra hands working in the background, silent, precise, tireless. It bridges the space between data and decision, giving managers insight before meetings even begin. Wave completes the picture. It speaks to entrepreneurs who are starting small, maybe from a single desk or shared workspace. It offers core features: billing, expense tracking, receipt scanning, Without monthly fees, it removes the pressure of subscriptions during the fragile early months of a business. It proves that financial clarity is not about budget size. It is about choosing the right tool and using it consistently. Each of these platforms exists because business owners share the same challenge: too many tasks and too little time. The software does not erase that reality. It organizes it. It creates a rhythm where every action connects to the next. Payment leads to record. Record leads to report. Report leads to understanding. And understanding leads to better judgment. That sequence is what defines mature management. The financial landscape in the United States moves fast. Tax regulations shift. Digital payments expand. And consumer behavior changes with technology. A static system cannot survive this pace. Software updates bring new integrations, bank connections, and reporting methods that match current policies. The advantage of digital tools is not only convenience, but compliance. They evolve with the law so that business owners do not fall behind it. Technology, however, is only half the equation. The other half is human habit. Tools can reveal insights, but people must act on them. Consistency turns software into a partner. When owners check reports weekly, they start noticing trends. When they compare expenses monthly, they catch small leaks before they flood the balance sheet. Over time, the software becomes more than a utility. It becomes intuition built on data. Consider a coffee shop owner in Denver. Sales rise each weekend, but weekday profits stay flat. The reports show it clearly. With that knowledge, the owner introduces a loyalty program on Tuesdays and sees an instant improvement. The decision did not come from guesswork. It came from numbers presented with honesty. That is the quiet strength of well-used financial tools. They transform reaction into foresight. For accountants, these platforms change the very rhythm of work. Instead of collecting papers and receipts, they analyze results. Instead of solving crises, they guide planning. Clients gain confidence because reports are not mysteries, they are mirrors. The partnership between accountant and business becomes stronger when both speak the same digital language. Data security also matters. American businesses handle sensitive information, employee details, payment methods, vendor contracts. Reputable financial software encrypts every transaction, storing data on secure servers that meet federal standards. It is not only about convenience, it is about protection. Trust grows when clients know their numbers are safe. Cloud technology has blurred geographic boundaries. A startup in Texas can hire a bookkeeper from Ohio and still share live access to records. Distance no longer limits collaboration. This shift has opened doors for small firms to compete with larger ones by maintaining the same level of financial transparency. Automation is often misunderstood. It does not remove control. It refines it. When software automatically categorizes expenses or sends reminders, it frees the human mind for creative work. It eliminates repetitive mistakes and reduces fatigue. The owner spends less time correcting and more time planning. Automation is not the loss of oversight, it is the liberation from unnecessary friction. Integration is another powerful concept. Modern tools link accounting with payment gateways, e-commerce platforms, and customer databases. When a sale happens online, the system records it instantly. When a client pays an invoice, the balance updates without manual entry. This interconnection turns separate tasks into one continuous financial ecosystem. It reduces human error and increases accuracy. Mobile functionality adds one more layer. Business owners are rarely stationary. They travel, meet clients, and supervise operations remotely. Being able to review expenses, approve payments, or send invoices through a phone keeps momentum alive. The ability to manage money from anywhere supports the American culture of movement and independence. Artificial intelligence has started shaping these tools further. Predictive insights, automatic categorization, and expense forecasting are now part of everyday features. The technology learns from usage patterns. It highlights anomalies before they become losses. It suggests adjustments that preserve stability. For business owners, it feels like having a silent advisor available at all hours. Yet even with advanced functions, the true essence remains simplicity. No software should intimidate its user. The best systems communicate clearly, showing information in human terms. They respect time and attention. A busy owner should be able to log in, see what matters, and move forward within minutes. Complexity has no place in effective management. Adoption often begins with hesitation. New users fear they will make mistakes, or that automation might change their workflow too drastically. But once they experience the relief of instant organization, hesitation fades. The peace that comes from accuracy outweighs the discomfort of learning. This shift mirrors a broader truth about business: the willingness to evolve determines who lasts. Financial clarity also influences culture inside a company. When employees understand how the organization manages resources, they become more careful and responsible. Transparent reporting builds trust between departments. Everyone sees how their effort translates into measurable results. The tool becomes not just an accounting aid but a communication bridge. Investors notice this discipline. A business that can present clean, verified records gains confidence faster. Access to funding improves when financial statements are accurate and well-structured. The perception of professionalism often begins with the reports generated by these very tools. In a competitive American market, presentation matters as much as performance. Every number tells a part of the story: the cost of materials, the hours invested, the profit earned. Financial software gathers those pieces and arranges them into a clear narrative. It does not change reality. It reveals it. That revelation is what allows leaders to act with intention. In the end, software is not the hero of the story. The hero is the business owner who decides to bring order to complexity, to replace confusion with structure. Technology is simply the instrument. What defines success is the discipline to use it daily, to learn from it, and to grow through it. As the night settles outside the window, the man in the office closes his laptop. The numbers on the screen are not just figures, they are reflections of effort, patience, and smart management. Tomorrow will bring new transactions, new challenges, new goals. But tonight there is clarity. And clarity, once achieved, becomes a habit that guides every future decision. The journey toward organized finances does not end with selecting a tool. It continues with commitment, with the quiet promise to stay informed. Software gives structure, but people give purpose. Together they form the foundation of every successful business in the United States.